You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means we are back in action. It is Education Wednesday. Hope everyone's having a good start, a good middle. Whenever you're listening to this, chances are it's yet another wild day. As we're recording this, it's another wild day. We are whipping and sawing. What's a couple hundred handles in the S&P intraday amongst friends at this point? You know, it's just an average day that ends in Y to all of us out here. So make sure you're tuning in to OBC. If you're one of our newer listeners, of course, make sure you check out the archives because there's just so much wild stuff going on. You don't want to be caught unawares. Take some time, go into the archives, check out the episodes you missed, maybe search for some topics that intrigue you. Either way, it's good stuff to arm yourself for whatever's coming at you, and it's all wild stuff these days. My name, of course, Mark Longo from theoptionsinsider.com. In addition to checking out, of course, the archives of OBC, you should be checking out the full network. And when you're ready to flip the switch, turn the dial up to 11, then head on over to theoptionsinsider.com/pro. That'll get you awesome pro Q&A sessions, options oddities. Awesome one yesterday with another Dan. Our good buddy Dan, the man, Gramza. That man will tackle any asset class under the sun, and we went deep. Got questions about gold. We tackled it, silver, all the equities. Where should you be buying in at the S&P right now? Or should you maybe choose the Russell or the NASDAQ? What about ags? What about vol products? Crypto? We went into all of it yesterday. Only one place to get it, theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on the old program today, time to toss it to yet another Dan, this one of the black-hatted variety, Mr. Dan Passarelli of Substack fame these days. Mr. P, welcome back to the show, sir.
Hello, Mark Longo. How are you, my friend? Good to be here.
I am doing well. This new earlier time slot, does that conflict with your day drinking, sir, or are we good?
Oh, we're all good. We're all good.
You know what else is good, Dan? A little bit of the old options drills. So let's get to it.
Well, in boots, time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
All right, everybody, welcome to Options Drills, where we talk about some tips, some tricks of the trade for how you can utilize options in your portfolios. And Dan, we've uncovered a little bit of gold on the show today. It is a rare treasure indeed. It is a topic that I don't believe, I have to go search every episode again, but I don't believe, Dan, we've ever discussed this in the over 13-year history of the show now. That's like a treasure. It's like finding gold, Dan.
Finding gold? I love to find gold.
Now, what are we talking about today in options drills? This kind of topic is literally why this segment was created, listeners. We're going to talk about something that's kind of really where the rubber meets the road when you're trading options. This is order types, and really kind of some of the more advanced order types. Dan, when I say options order types, what really leaps to mind? Let's play a little word association, my favorite game to play with you, sir.
Well, I mean, I think of entry and exit tactics. I like toying with order types myself.
There is a lot of fun to be had, a lot of danger as well, listeners. So we're going to talk about a variety of order types you might want to use, get into some advanced ones. We're also going to separate them into two kind of broad buckets. There are many ways you can carve up order types at the end of the day. We're going to go into more of the, I guess you can call them the duration type orders. Then we'll get into some of the more funky kind of conditional type orders out there. So basically, and again, these are all going to vary by your broker and your account type. So not every firm is going to offer every order type for every different type of account. So just bear that in mind. You really should go check with your broker if you have questions about these order types. And if they don't have a particular order type that you want, then maybe it's worth jumping ship. As we dive into some of this, let's get into some of the basic duration stuff you've probably encountered already if you've been listening to this show. If you've ever entered an options order in your life, you put in the order, obviously buy or sell, you pick your option, your strike, all that fun stuff. And then you go into pretty much the duration. How long is this order good for? And most of your standard orders, especially when you're first starting out, listeners, it's going to be good for the day. That's kind of the standard order type. It is exactly what it sounds like. You put the order, it's good till the close of that trading session. If it gets filled during then, guess what? You're filled. If it's not filled by the end of the day, guess what? It goes away. You can live to fight another day out there. Now, we can play with that duration in a variety of interesting ways. And to get a little bit more advanced, these were the order types you used to see going up a lot on the floor, which is pretty much a good till canceled, or a GTC order as they're known. That's where you come in, you place this order type, and it could be for stock. Obviously, we're going to look at things through the options lens, obviously. And then that order is good for, and again, it's going to be for a specific duration until you cancel it or it's filled within that duration. Again, most brokers are going to allow you to keep a GTC open until 60 to 90 days. Again, check with your broker. Obviously, more time is better, but you never know what you're going to get. Why would you use this? Again, you have a very specific time horizon where you're interested in putting on a trade. Maybe you're looking at a particular stock and you want to maybe buy some options on it, buy some calls. Maybe you're bullish, but earnings are coming up and you don't want to put this trade on after earnings. So you put on a GTC order and maybe you specify the earnings date. You have a good till date if your platform lets you do it, or you cancel it going into earnings type of thing. But in general, these are your good till orders, good till canceled, good for 60 days, good for a day, good for 90 days, that type of duration fun. Dan, what are your thoughts when I bring up these kind of GTC orders and in general, these types of duration orders, sir?
I use GTC orders every single day. I love them. And honestly, it took me a while to cross that bridge. I used to not like them because I was afraid like I would forget that I have them in, but I just got in the habit of knowing that it's pretty much always in. If it's not in, there's a reason for it. So yeah, I mean, they save you. First of all, they're a great way to help plan your exits. You know, you put in a trade and you're like, well, the first question you should ask yourself as soon as you get filled is, where am I going to try and get out of this trade for a winner and for a loser? You put in the GTC limit order to take your profit, which is my main thing for it. and boom, half your plan is already set into motion. You oversleep the next day, doesn't matter. Get hit by a bus, doesn't matter. Well, I mean, it kind of matters, but not to your trade. Yeah, I love GTCs.
Might matter a little if you get hit by a bus, but you're right. Specifically for the order type, it does not matter out there. And you're right. That's kind of my primary use case as well, as using them on the exit side. You put on a trade, and then you put on, an exit order, good to cancel for, 60 or 90 days, and hopefully the trade works out. You exit. That's my typical use case. I'll use them to get into trades every now and then as well, but that seems to be my predominant use case. Listeners, what is your predominant use case for the old GTC, or did you not know about those? Is that a new order type to you? In which case, we're going to get weirder and wilder in a second, because Dan, we could play with the kind of duration type orders in a variety of ways. Some of these are a little bit more obscure, but not every platform, again, is going to offer these either. And these are effectively two instant gratification order types, Dan. These are the IOC, so immediate or cancel, and that's effectively an order that puts in exactly like it sounds. It's an immediate order to buy stock or buy an option, and if you can't fill it right away, that's it. It's canceled. Maybe you go in and you see that there's a spread in the market and there's 100 on the bid for a particular option, and there's only 3 on the offer. And you see it's pretty tight. And you're like, maybe there's an order in the book there that's kind of gumming up the spread. Let me put in an IOC there. So let's say I want to buy 10. And I go in to buy 10 at that really tight, low offer. And you get the 3. And then the market moves. And now the market is a quarter wide or something like that. And so you get your 3. And the rest is canceled. So you can get a partial fill on an IOC. Again, not my favorite use case. I think these types of, I guess you can call them threatening order types as well. Like, fill it now or I'm out. I think they had a little bit more gravitas back on the floor trading days. These used to come in during the day and the floor broker would see it and they'd be like, well, I'm bid here, maybe in the middle of your market. And you're, as a market maker, kind of like, I don't know if I really want to do that. But then they're like, I'm IOC. If you don't take it now, it's gone. Gives you a little bit more impetus to make the trade as a market maker. That stuff really doesn't fly in the era of electronic market making anymore. The broker can't really lean on the crowd the way they used to get this kind of stuff done. So they still exist. I think that use case I just mentioned, maybe trying to widen out a market. And if there really is some more size there, you can get it. But in reality, you're just you're clearing out an order and showing the real market is probably the most modern use case for it. And the other side of this order is, again, another immediate order, but this is a fill or kill order. This is the same type of thing. You're going in, you're going to trade a stock or an option, and it has to be executed that second, immediately. And also, caveat, has to be in its entirety, no partials here. So if you see that 3 lot on that offer, same scenario, and you go in to buy 10, guess what? If there's only 3, orders cancel. You're not going to get filled there. So it's a fill or kill order. Again, same thing as the IOC, but you have to get the whole caboodle. Otherwise, you're out. Dan, are you down with a little bit of these kind of immediate, almost threatening order types? And do you see a use case for them in the modern environment?
Oh, yeah. I mean, I agree. Like on the floor, we used to see them often. But I'll tell you, I have used them a handful of times over the past couple of years, and it just seems like the market makers don't give a flying,
Exactly. That's what these orders are for, right? Just trying to hold a little bit of a gun to the head of a market maker, trying to exert whatever leverage you can for your 10 lot to Citadel. And guess what, Dan? They don't give an F.
Yeah, they do not care at all, it seems to me. So I wish they did, but no, I don't think they do.
You're like, I'm taking my 10 lot and going home if you don't fill me right now. And they're like, yeah, see you later. So yeah, I agree. Some of the leverage that used to be inherent in these orders kind of gone in a modern electronic environment. Chalk it up to yet another victim of the death of open outcry, Dan. The broker just can't lean on people for the IOCs the way they used to. I see our chat, Dan, by the way, they're agreeing with us. A lot of them like to use GTC orders as an exit to a trade. We got MU here saying as soon as this trade is executed, it has a GTC coming right after it to get out of it, which is a good way to do it. You're setting up your trade. You know exactly what you want. You know where you got in. You know where you want to get out. It's a great use case. Would you concur, sir?
Yeah, for sure. Yep, definitely.
Definitely, says Mr. Dan. Let's get into some funkier order types now, listeners. These are more of the conditional type orders where something has to happen in the marketplace in order for your order to trigger. We're going to start with one of the funkier ones here. One of the more important ones that I don't use all the time, Dan, but when I'm on a platform that doesn't offer it, I will discover it, and it will be to my chagrin, and I will usually go to another platform that does offer this type. What am I talking about, listeners? These are one cancels the other, or OCO type orders. And they are exactly what they sound like. It's are you executing or entering really two conditional orders at the same time? You're like, why would you do that? Well, there's a lot of different use cases for why you might want an OCO. You might be looking at a setup in a particular underlying, and maybe, let's say you're bullish and you want to get long, but maybe the liquidity isn't quite there. And also maybe you're not quite decided between a couple of different approaches to take. Maybe the liquidity is better in one scenario than another. So maybe you come in, you say, I'm going to work two similar type orders. I only want one. I don't want to double up on this trade. So maybe you have a particular stock, XYZ, you're bullish, and you decide I'll work an order to buy an at the money call for one order. And then on the other one, I'll try my luck maybe a little bit farther up the strike chain, and I'll do more of an out of the money call vertical instead. Both bullish trades, different way to carve up the same onion at the end of the day. So you probably don't want both. Then you're getting into the Uncle Mike stupid territory. And not him being stupid. It's called a trade, listeners, before you go rat me out to Dan's nemesis, Uncle Mike. But that is one use case. There are a variety of them. So what are we talking about? You're coming in, let's say in that exact scenario, XYZ stock, you're working a front month buy at the money call order and also a front month out of the money call vertical order. Well, you don't want one. So maybe, like we said, maybe there's some orders in the book that is squeezing down the market in one of those particular strikes. You're trying to take advantage of that. Whatever the case may be, you're trying your hand at two similar type trades, but you don't want both. The OCO allows you to do that. It allows you to put those in, and then the second one of those is triggered, one of those starts filling, guess what? The other one is canceled, so you don't have to worry about doubling down on the same trade or very similar type trades. And again, it's a very specific use case for this type of order, but I found myself in scenarios a few times. I'm looking at maybe some less liquid names. I'm like, I don't know, maybe I want to line up here, but the market isn't that great. It's a little bit tighter here, a little bit better here, a little bit more OI maybe on this strikes. Maybe I'll go for that one, but I would prefer this other one. So there's a couple of different ways that you could utilize this. And the OCO allows you to kind of have your cake and eat it too. You could put two hooks in the water as opposed to one when you're fishing. And wherever you get the nibble, guess what? That's where you go and make your trade. So it is a useful, if lesser known order type. Dan, what are your thoughts on OCO, sir? Do you use them? And if so, why?
I mean, conceptually, I think they're great. I don't use them a lot because most of the trades that I trade are spreads. And I believe that you cannot effectively use stop losses on spreads. And that's really the only use case that I use OCOs for, is put in a profit-taking limit order and a stop loss, just basically bracketing the trade. And I, notwithstanding the use cases that you mentioned in addition to that, but that's the only use case I have it for. So every now and then, if I'm just doing a stock, trying to get out of a stock, or trying to get out of like a long call or long put, or maybe cash secured put, I might consider using it. But I use them so infrequently, and they're so confusing on how to enter them on Thinkorswim. I always have to like refresh my memory on how to do it. So yeah, there's your answer. I just don't use them too much.
Our chat is pointing out another good use case for these as well. Nichols is saying, I'm down with, I'm assuming he means OCOs. He wrote COs. Yeah. Maybe he likes his commanding officers. He's down with OCOs as well. Great order type when I'm trying to get filled in SVIX or UVIX. Yeah, that's another use case for this type of order is similar products where you want to do a similar type trade. Let's say maybe you want to buy some puts in UVIX. You're playing the vol fade, or you want to go about it by playing the calls to the upside in SVIX. Obviously, SVIX, an inverse product. UVIX, I should say, a levered product. Maybe the liquidity, obviously, in one is better than the other. So that could drive you. And so maybe you say, hey, I'm going to work these two order types as well. Different but similar products, similar type trades at the end of the day. And again, I will let the liquidity guide me and dictate where I go. Whichever one gives me the better fill, I will take that. So that is another use case. Again, check with your broker on these. Not every broker is going to allow you to use the OCO to begin with or to put different products in it. So just check with that one first. But that is another use case that I have found. In particular, in the vol space, that is a use case I know people use where different products, different ways, again, to carve up that onion at the end of the day. You want to play the vol fade, you want to play a vol pop, whatever it might be. There's different products you might want to approach. All have different liquidity spectrums. And so the OCO may allow you to play one versus the other. You got a couple other types here, Dan. Trailing stop order. What do we got here? Well, that's, of course, again, another kind of conditional order type. You create a stop order whenever you hit a certain price, or you can also set it to be a certain percentage, out of the money that you trigger there as well. And once you trigger that trailing stop order, that turns into a market order, which, again, got to be careful with any order type that ends with it becomes a market order. That way can lie ruin and madness if you are not careful. If you are going to do this, I definitely recommend you go this route instead, which is the trailing stop limit order, exactly like it sounds like. Similar to the other order type, you're going to set it for, a certain price or maybe a certain percentage move in your underlying. But then it doesn't just throw the baby out with the bathwater and turn it into a market order. No, it has some reason. It has some limit to it because you're setting a limit price instead. So if you're going to use these order types, I think this is the better way to go of the two. Mr. Dan, do you agree? And do you have any use case for trailing stop orders and trailing stop limit orders?
Oh, I mean, it's kind of the same thing. I mean, trailing stop limit orders, I don't know. I think you got to have there's a lot of extra risk with those because if it just blows through and you miss it, you're just not going to get it. But I don't know. It's kind of the same thing for trailing stops that I said before. It's really hard to use stops with spreads because of the two different options. The bid-ask spread is just by nature wider, and so it's really easy to get kind of hosed and get a lousy fill. What I do instead is I just set an alert so that I can manually enter an order and middle the market. Now I kind of have that luxury because I always have my trading platform open and my butt is always in the chair in front of that trading platform. Even if I'm not trading at the moment, it's still up. So, I mean, for me, I get the alert, boom, I enter the trade. Somebody's working full time, it's a little harder, but still, stops and spreads, they just don't work so well. I don't know.
They can be challenging. And yeah, the trailing stop limit, not really order types I utilize very often, but I wanted to include them. I know there's a few of our listeners out there who probably utilize them. Speaking of order types I don't really use, Dan, the MOC, the market on close, and then I guess its counterpart, the LOC, limit on close, a type where even back when I was on the trading floor and I first encountered these orders, they seemed to be more prevalent back then for whatever reason. I remember saying to myself, what is the purpose of this order? You have this order that comes in, usually right on the opening bell, sits there all day often, Dan, and then gets filled at the close. It was puzzling to put it mildly out there. What are we talking about, listeners? MOC, market on close orders, is exactly what it sounds like. You put an order in, could be at the beginning of the day, could be close to the end, the middle, whenever you want. It will be executed at the end of the day, and you will be filled because it turns into a market order. Again, caveat I just laid down before applies here as well. So that's a double-edged sword. You will be filled, which I guess is nice. You have that certainty, but it's a market order. You have no idea where the market will be, obviously, at the end of the day. And also how good of an execution you're going to get because it's a market order that people have seen and known about, and they're probably going to lean on if it's any decent size. So A, it's going to a market order, which always makes me nervous. B, it's sitting around. People know it's there. They could lean on it if they want. They could easily pick you off or run you over. It just seems like a poorly thought out order type. That said, I will say, recently I did have a moment where I considered playing with this order type. And let me tell you exactly why, because it was a very specific use case. If you've been listening to any of our content on the network for a while, especially our pro Q&As or vol views with our good buddy Dr. Vix, he's been workshopping for a while this quote unquote secret weekend UVIX trade. I think I've talked about it here on the show a couple of times. That is all underlying, which is kind of the predominant use case for these. You can use them with options, but it's usually done around the underlying. And that is also entirely done where you want to execute that opening trade as close to the close as possible and then take it off right on the open. So you have a minimal delta risk in the final few minutes of the day out there. So if you're executing that type of specific strategy where you're trying to literally buy on the close and then sell on the open the following Monday, this is a potential use case for that. That said, I did not utilize it. I thought about it. I thought, oh, maybe I finally discovered the perfect use case for MOC orders all these years later. I did not use it because, again, it's a market order that always gives me the heebie-jeebies. I'd much rather work it myself and make sure I get a decent price, or I just don't put on the trade. But that is one potential use case for it. And then the flip side of it is the one I'm more comfortable using, which is the LOC, or the limit on close, much less common than the MOC order type. And again, it does the same thing. You trigger at the close, and now it's a limit order. So as Dan was saying earlier, there's no guarantee you're going to get filled. If it's not at your limit, then you're not going to be filled. So maybe that lack of certainty is not for you. For me, it just protects me from getting completely hosed on a transaction because it turns into a market order at some ridiculous price that I never wanted. I like, whenever possible, utilizing a limit, with Dan's other caveat then that if you're trying to do these with spreads, I don't know if you can even do MOCs with spreads. I'll have to check on the options side. That's going to be, or LOCs, even more challenging. Dan, what are your thoughts? Did you ever suss out a reasonable use case for an MOC order, sir?
So I'm going to tell you, Mark, this is one of those times where I'm taking the other side of the equation.
You love MOCs?
I do.
Really?
Yeah.
All right. Tell me why, sir.
Well, I use them for when I have experimented with Russell's UVIX trade.
See, it's freaking Russell leading us all to the dark side. That's what it is. Exactly. I knew it.
I know. And I'm going to tell you what, like, you know, we grew up on the trading floor around the same time. You know, a market order came in when we were market makers back then, and we'd be like, oh, baby, come to Papa, you know, and it was a lousy thing for a retail customer to enter a market order. But I'm going to tell you what, man, I would say most of the time now, market orders, you get a decent fill. And so market on close, you know, I mean, if you want to trade on the closing price, you put it in, I looked at the quality of the fills when I first started doing it. I've kind of just been trusting since, but they were all very, very reasonable fills. Like nothing like, oh, I bought this $3 over the offer. What? You know, they were all mid-market. So I don't know. I think these days with the pressure as a result of payment for order flow, you get filled mid-market. I mean, worst case, you get filled on the offer, but you know, if you put it in mid-market, you run the risk of not getting filled anyway. So you might as well buy the offer. So yeah, I use it. I use them.
Or outside of Russell's secret weekend trade, what is it? Do you have any other use cases for MOC orders?
I don't know. I probably have used it for something else, but maybe on an expiration day where it's like, oh crap, I got to get out of this thing. I might do. No, I probably don't do that, because if I still have it on at the close on expiration, it's because it's illiquid anyway. I don't know, nothing I can think of, but I would give it a flyer. I'd take a shot with one.
I think it's funny that both of us been doing this for a little bit in the options game, and both finally hit upon the one unique use case for MOC orders, and it's this one freaking trade, and that is it. And it's all because Dr. Vix has led us to the dark side. Our chat's mocking him as well, saying Dr. Vix is leading everyone astray. Yes, he is. If you want to check out what the hell we're talking about, check out VolViews. Check out the Pro Q&A, where we talk about this trade quite a bit, as Dan and I bring it home a little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, Mr. Dan, I got some questions of the week I want to pay off, but do you have a MTM question of the week you were just burning to ask the folks, or should I roll into some questions and some polls?
Oh goodness. Honestly, I can't think of anything I've been asked recently.
your folks are they're like, Dan, why do you love MOC so much? That's what they keep asking.
Right.
Why do you keep telling us to use these freaking MOCs? All right, to the listener mailbag we go, listeners. And actually, we've had a lot of fun questions of the week lighting up our tape of late. So I want to pay off some of those pretty quickly, because they're kind of interesting. They also show where the sentiment is out there right now. And again, if you're listening down the road, months or years down the road, you should be checking out at Options on Twitter anyway, because you'll see what questions we have going on whenever you're listening, and you could play along and gauge the sentiment that way. We asked Dan last week, do you feel this tariff tantrum will continue to rock the markets through the end of the month? At the time we posted this, VIX was at a 35. We said, hey, will it simply be higher or lower at the end of the month, or will it still be kind of vacillating around 35? And Dan, nearly half, 48.7%, went lower. I think a lot of them were biased, because I think you were biased on the show last week, because almost immediately after we posted this, our VIX dropped to about a 31. So it was technically lower. So almost half, Dan, 48.7%, cheated and went with where VIX was trading right then. They said lower. 28.9% said higher. And interestingly, nearly a quarter, 22.4%, said it's still going to be vacillating around 35 at the end of the month, Dan. So they're not feeling this vol going away anytime soon. What are your thoughts?
Yeah, in our daily video yesterday, I made the same case. If you asked me 2 weeks ago, I would have said, it would stay high, but it would abate a little bit. But no, I think it's going to stay high for a while. And my rationale is this. First of all, yeah, sure, we get the, hot and cold changes in policies on a whim and such, and we're probably still going to keep getting that unless, the administration wants to improve the ratings, market-like stability. I don't know. But that's the least of it. What really matters is for every company, like every company has competitors that are in another country. And some are in England and France, and some are in Vietnam and China. And so the tariffs on this one is going to be different than the tariffs on that one, and it's going to affect their supply and demand. But even more importantly is, what is the elasticity of demand for all these products out there? Company ABC or WXYZ, that's my new thing, WXYZ, because you can't use XYZ anymore. Company WXYZ makes this widget or whatever, and they sell it for $100. The tariffs are 20%. Now it's $120. There are some products that exist where what we call the elasticity of demand is nothing. The price change doesn't matter. And there's some where it's everything, where the price change matters a ton. And so, I don't know. I mean, you basically have to look at every company's, every product, what the new price will be after tariffs, and say, are people going to pay this? And the answer for some products are going to be, yeah. And the answer for other products are going to be no way. But you don't know the answer. I doubt analysts know the answer. I doubt that the decision makers, the CEOs and CFOs and all that, COOs at the companies, I doubt that they know the answer. So I think the VIX is going to be high, not just through next earnings, because the tariffs won't really have that big of an effect on next earnings, but all the way through earnings 2 quarters from now. That's when we're really going to find out how much the new tariffs affect things. So I think we're going to be around around 30 for the next 6 months.
Yeah, that's why it's so wild. I mean, even today reflects it, right? 100+ handle rally, then selling off a bit, and then kind of stabilizing just intraday because there's so much uncertainty. So, yes, a long way around to saying it looks like there's probably still some vol on the horizon for the immediate future. We also, a couple of weeks ago, Dan, we asked folks if they wanted to sell the par puts in NVIDIA for $18, expiring at the end of the year if they rather buy them. And the results on those, listeners, are that you folks wanted to sell them. And this past week, we noticed Apple was flirting with the 200 strike, and the December par puts, the 200 puts, also trading around $18. So $18 is apparently the magical level, Dan. And we said, gun to your head, same setup. You have to hold the trade through expiration, whichever way you go. Which way are you going? Are you selling the D's par puts for $18, or are you buying them for $18? And Dan, our audience here, a lot more mixed on this one. It kind of vacillated around 50% for most of the week. It ended up going out slightly biased towards the sellers, 54.5%, 45.5%. Want to buy those puts for $18. Again, it's hard to argue with either, really. We were below that break-even level for those puts not that long ago. So kind of interesting. Dan, which way are you going? What do you think the way our audience ended up going ever so slightly?
Yeah, I'm sold, baby. I'd sell them, and I would hope I get assigned and keep the stock for the long run. But if I don't, I'm great making 10% over a 9-month period as well, or an 8-month period as well. So yeah, sold. Sold,
says Mr. Dan. Which way did you go on our question of the week, listeners? We also had a fun flash poll. I think this was during vol views, maybe during option block last week. The June 16 puts traded in a big block, 20,000 plus time. I think total of like 60,000 on the day. For prices around 12 cents. We said at that price, are you a buyer or a seller? 60% of you want to buy in for 12 cents. I get it. It's a cheap flyer, even if it is a kind of far out of the money, looking ever more distant by the day flyer. 40% of you want to sell it. Collect that 12 cents out there. Keep an eye on ad options for more fun questions of the week and flash polls, listeners. And Mr. Dan, where should they go on Substack if they want to keep more eyes on what you got cooking, sir?
Yeah, I've got some good stuff going on Substack, I think, anyway. It's wealthbuildingwithoptions.substack.com. I know it's a lot of words, but they're all easy to spell, and it's all just one word, wealthbuildingwithoptions.substack.com.
All right, listeners, check them out over there, Wealth Building with Options. Also check them out over there at MTM, a.k.a. Market Taker Mentoring. And speaking of Market Taker Mentoring, if you haven't had enough of those guys, listeners, I will be joined on our Futures Rundown program by John's other half, his work wife, John Seguin, Dan's other better half, his work wife, John Seguin, the senior technical analyst and educator over there at MTM. I'm going to talk some futures. Going to get nitty gritty with the underlying. What's going to make it on? Is it going to be gold? Is it going to be equities? Is it going to be VIX? Is it going to be crypto? Is it going to be crude oil? Got to tune in to find out. Spoiler alert, probably all of those, but we'll never know until we crunch the numbers. That's coming up in a little bit, 2 p.m. Central. Yet another reason, listeners, why we should be listening to the full network. And of course, if you're listening live, listeners, hang out. We'll be back in a little bit with that show, pump some fun stuff in the live. In the meantime, and then see you back here throughout the rest of the week with our usual array of content until we're back next Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.